Well, Josh, you've got a new name that just made your best stocks in the market list.
Yeah, it's EQT, which is I know it's he's saying that you're like the kid in class, like, oh, me, keep going. Joe owns EQT, very, very low relative to where it's trading today. All right, you cool now? Okay. EQT is about to break out. Every technician is talking about it because it's bumping up against this 48 resistance level. Hasn't quite punched through yet. It's one of the only names right now amongst large cap U.S. stocks that is within spitting distance of a new 52-week high because of this flush that we've had in December. It's in a sector that really hasn't done anything in a long time. It's one of the better fundamental stories in that sector, which is how it hits my list. And if, in fact, it does break out above 48, Joe's going to be happy, and a lot of technicians who are anticipating this breakout are going to be happy as well.
Then I guess I get to be the teacher. So, Joe, it's now your turn. Give us your thoughts on EQT.
I mean, Josh could keep going here. The stock broke out. It was in a little bit of a sideways pattern in the second quarter. It broke out above the low 40s range. But prior to that, what this company fundamentally really benefits from is its location.
Okay.
Its location, its proximity to the data center demand that I mentioned before, because natural gas is becoming a more important source of power generation, in particular when we spent the last 4 years prioritizing decarbonization. So you used to be at a point where a utility, if the price of natural gas got to, let's say, $4.25, the utility automatically would switch to coal. Now, because of decarbonization, they no longer have that ability to switch the coal. EQT sitting where it does in the Appalachian really benefits geographically. It's a quality company. It's a little bit rich on valuation, but you're paying a premium for, I think, what's strong fundamentals, and to Josh's point, strong.
Are there any other nat gas names worth looking at that haven't gone up as much for the same reasons, or is this very unique?
Not where you find a strong balance sheet like you get with EQT. The problem with a lot of the natural gas names is they're ridden with a lot of debt.
And natural gas, of course, up 38% in the last 2 months. EQT is a name there that I know, Jim, you don't have, but you have thoughts on Cheniere.
Yeah, well, you know, if we think about why natural gas is up, and you quoted a short-term price, it's basically more than doubled over the last year. It was well below $2 during the middle of 2024. And why is that? A lot of it has to do with what's going on Russia, Ukraine, and over the weekend, there was the termination of the deal by which Russia has been shipping natural gas through pipelines through Ukraine to Europe, okay? So what that means is there's going to be more liquid natural gas. That market's going to expand. There's going to be more exports from the U.S., which is what Cheniere does. It's a pipeline company, but it has these export terminals along the Gulf Coast. There's going to be growth in LNG cargoes going to Europe and elsewhere. That is why natural gas is up. And I want to just go back to a year ago. Why did natural gas go down so much? It was because there was a moratorium placed on building new export terminals. Insiders will say, hey, we had enough export terminals. The point that I'm driving at, though, is export terminals and the ability to export LNG is what's causing the price to rise. That doesn't look like it's going to stop anytime soon. You know, maybe some people will say, hey, cold snap, polar vortex in January. Okay, maybe that's why natural gas is at $3.78 instead of $3.50 or $3.40. But I think we should expect that under this administration, the idea of below $2 or even $2.50 natural gas is unlikely.
I was just going to bring up that polar vortex. It's flipping freezing outside. Liz, when we talk about, we could broaden it out and talk about the energy space. Actually, the leader here today, up about 1%, obviously hasn't been super strong over the past year. What do you make of expectations for the sector, say 2025? Or I don't know, pick your time range.
Yeah, I mean, I mentioned this a little before. So if we have a resurgence in inflation, energy could be one of the beneficiaries of that. Energy, if you look at earnings, is expected to turn positive earnings growth in 2025, which is very different from what happened in 2024, but still kind of lackluster results. Although we've got oil prices that have been sort of in a range for a while, I do think energy is an opportunity in 2025, but I wouldn't call for it to be a double-digit positive opportunity.
Fair enough. It is leading the way here today, at least in the very short term.